Good evening. Thanks very much for joining us on India Business Hour. We're breaking a big story tonight right here on CNBC TV 18. The much-awaited comments from the Finance Ministry with regards to bank licenses have been sent in to the Reserve Bank of India. Our sources tell us the Finance Ministry finalized its comments and sent them to the Reserve Bank on the 14th of January. Let's go across now to our economic policy editor, Siddharth Zarabi, who joins us now. He's studied the comments that the Finance Ministry has finalized, and the big takeaway there really seems to be a big diversion from what the Reserve Bank had said with regards to who is eligible for those bank licenses, and the Finance Ministry saying real estate companies and promoters who also own broking businesses may not necessarily be disqualified from the process. Let's go across to Siddharth now. He joins us. Siddharth, first of all, we learn that the Finance Ministry has finalized its comments. It sent those comments into the Reserve Bank of India. Take us through the comments that have been sent in by the Finance Ministry to the central bank.
Well, like you said, and like information got by our colleague Anshu Sharma, the key takeaway really of these comments by the Finance Ministry on the RBI draft guidelines is the one with, in clause 2A, 3 and 4, where the RBI guidelines had said that entities and groups, and I'm going to read this, having 10% or more income or assets from real estate business or stockbroking shall not be eligible to promote banks if they have had this business for the previous 3 years. The Finance Ministry says that when there is a complete ban on taking exposure by a new bank to the promoters and promoter group entities or any individuals associated with that, then there is no need to keep this restriction on the businesses of the promoter group, and that this clause should be deleted. While we should not interpret this in any manner that the Finance Ministry is suggesting that real estate companies or stockbrokers or traders be allowed to get into the banking business, we must clarify that. It is definitely saying that this restriction is not needed, given that there is a corresponding proposed legislation which will ban a new bank from doing any sort of investments or relation with the promoter group or any of its associate enterprises and individuals. This clause has also to be read with one more important Finance Ministry amendment that it has proposed with respect to the RBI draft guideline. The RBI draft guideline had a clause 2A, subclause 1, which spoke about non-operative holding company. In this, the Finance Ministry says that NOHC should be amended with the addition of the word non-operating financial holding company, and the Finance Ministry explains why it thinks that this is necessary, because a working group on the introduction of financial holding companies in India, which was headed by Shamla Gopinath, Deputy Governor RBI, had also proposed this. This, therefore, it then goes on to further add that only financial sector entities be considered part of the NOFHC classification, which in some ways, initial interpretations, again, I must point out because we are still digesting the import of the Finance Ministry comments, could suggest that only those entities which have a proven track record in the financial sector space could be those which would be eligible for new bank licenses. Could it therefore imply that this is something that we had sort of reported and spoken about some weeks back, which is NBFC is likely to get a priority as far as the eligibility for new bank licenses is concerned? Is it a clear-cut pointer in that regard? I think the final answer will eventually come once the final draft is released by the RBI, but this is the second important clarification that has been provided. Shireen, before I go on further points, yeah, go ahead, please.
Exactly. I was just going to ask you to hold that thought, because let's address these two issues. We've also got ASHWIN Parekh joining us, so let's get a debate going on this. Mr. Parikh, appreciate you joining us here on India Business Hour. We're grappling with this story. We're breaking it at this point in time. The big point that we seem to have picked up is the fact that the Reserve Bank had said that real estate companies, promoters who were in any way connected to the broking business should be disqualified or not eligible for a new bank license. The Finance Ministry seems to be suggesting that there is no need to restrict businesses of new bank promoter groups because you anyway cannot have any exposure. So do you believe the Finance Ministry is right when it suggests so, because it is a deviation from what the Reserve Bank had proposed?
Well, I mean, see, there are 2 points of view, Shireen, as I see over here. And therefore, it's difficult to really tell what is right and what isn't. But, the two distinct viewpoints are that the government is trying to look at methods under which, or ways under which more capital can be brought to banking sector to fund the economic growth. We are now seeing that the amount of capital required by the banking sector will keep on growing as the economy grows and the extent of intermediation grows. The RBI, on the other side, is looking at stability. It's looking at the stability of the sector and more concerned about the systemic risks. So, the point of view, each one has very valid sort of, approach to this particular
But do you buy the argument? Do you buy the argument? Are you convinced by the argument that the Finance Ministry is making on deleting this particular clause which the Reserve Bank had proposed?
Well, see, the issue that the discussion papers in the RBI documents have pointed out is that the concern is with the market, the price volatility in the market, and the nature of its business. I.e., it could be considered as speculative in nature. So to that extent, I would say there is a good justification in the RBI's point of view, I would say.
Okay, let me go back to Siddharth. Siddharth, you were talking about those two important clauses, but there's other details as well there. The Finance Ministry has also spoken about the need to define promoter groups, and this is something that in our conversations with industry has also come up. So in a sense, the Finance Ministry echoing what industry has been saying.
Absolutely. In fact, let me read out what the Finance Ministry has said with respect to the definition of the promoter. It basically asks the RBI to clearly define promoter group entities to signify and point out which entities are those or which will be treated as those where promoters have substantial control or ownership. The determination that the Finance Ministry is trying to make is that in a corporate structure where there are arm's length companies, where there are indirect forms of equity and ownership which are parallelly recognized by our existing laws, that clarity be provided on this aspect. And also, coming back to the point of the non-operating financial holding company, the capital adequacy for the proposal that the RBI had made, the Finance Ministry says that the 13% capital adequacy of the consolidated holding company should be on a risk-weighted asset basis, and that this shareholding in such a financial holding company may be excluded to arrive at the CRAR.
Okay.
Basically, financial holding companies, if they have any other intergroup equity holdings, that should be divorced from this element. So again, seeking clarity on two aspects. Who will be the promoters as far as the final new bank licenses are concerned in terms of their ownership, which will be the entities, a financial holding company specifically being suggested, and some more clauses being proposed for what the financial sector holding company can do and cannot do.
ASHWIN Parikh, you've heard Siddharth take us through the details in terms of what the Finance Ministry has said in response to the RBI's draft guidelines. Do you see most of this stuff passing muster with the central bank?
Well, this particular aspect, about the clarification on NOHC and NOFC, the holding company and the finance company, I suppose, I'm getting an impression that the ministry is seeking a little more flexibility, to make sure that some very eligible business houses also get entitlement or get entitled. And to that extent, I would say certainly, there is a merit in that particular case, I should say.
All right, ASHWIN Parikh, Siddharth Jarabi, appreciate you joining us here and taking us through that big CNBC TV 18 exclusive. The Finance Ministry has firmed up its views, sent them to the Reserve Bank on the 14th of January. As we've been reporting, the Reserve Bank is keen on putting the final guidelines out before we actually see a change of guard. The man who's heading the banking portfolio at the Reserve Bank is set to retire, so they want to get it done before that takes place. Appreciate you joining us here on CNBC TV 18. Elan.
Well, L&T Finance, Shriram Group will all be watching out for the final guidelines now. But